Charlotte, there's a lot going on in the world at the moment, isn't there? We've got conflicts, we've got economic uncertainty, and people are naturally telling us that they're worried about what it all means for their mortgage. Can you just talk a little bit about what's driving mortgage rates at the moment, and actually whether the situation and what's going on in the Middle East is genuinely having an impact on mortgages and mortgage rates?
Yeah,
What's your thoughts?
yes. So absolutely. So what's happening right now in the Middle East, the conflict in Iran, is having a direct impact in terms of fixed mortgage rates here in the UK and elsewhere, kind of in the global economy. Um, One of the key things around that is the price of oil. So as we've seen challenges with the Strait of Hormuz and whether or not we can get shipments out, that's driving up the cost of oil, which in turn has a trickle-down effect of driving up the prices that we have to pay for things. So energy prices, fuel prices, but also it'll end up into goods and other things. And what that then means is that the Bank of England, when they're assessing what does inflation look like, the expectation is that that trickle-down effect means inflation will increase, and the response to try and control inflation from the Bank of England is to raise interest rates. So right now,
Yeah.
everybody's watching kind of the price of oil and what's happening between the US and Iran with any form of ceasefire.
Hmm.
And what we're seeing with some of the volatility in interest rates is that as we see some optimistic news about the potentials of ceasefires, um, those mortgage rates, the swap costs that are built into the product fall, so rates come down. And then when we hear some more pessimistic news, they increase again. So right now, it is a really hot topic, and everybody's kind of watching to see what will happen, but it's pretty much unknown.
Mm. And that's as fluid as you just explained it. That they will move
They're
daily.
moving,
It could
yeah,
happen.
they're moving daily, and I think we've not the extent to which we're currently seeing that kind of movement. I've not experienced the rate of the movement probably ever really. So we always see interest rates move up and down. We always see the markets respond to data that's presented, whether or not that's employment data, latest inflation figures. Um, but this is quite different in terms of the level of volatility and
Mm.
how much rates can be moving up and down within a day. So
Yeah.
that's hence why people are keeping a watching brief and paying a lot of interest
Yes.
to it.
Yeah. I bet it's keeping you on your toes.
Yeah, well,
When
it's
we
keeping us
spoke,
busy.
yeah,
It's keeping us
when
busy.
we last caught up, which was back in October, I think at that point we were talking about affordability, and it was already a fairly big issue and a big concern. And I know the Skipton Home Affordability Index shows quite a shift in the picture of home ownership generally, doesn't it? Can you just chat a little bit about that, what that's shown you now?
It does. So our home affordability index looks at a whole range of factors, and it breaks down information into, I think it's 363 local authority areas. So you can go and have a look. What does affordability look like in your area? I think what we look at within that index is not only the cost to buy a house, but we look at living affordability as well, because what's really important is, yes, you want to get the keys to your first home and you want to be in your property, hanging up your pictures, decorating as you wish. You want to also have the lifestyle you want. So what does living affordability look like? So we take into
Yeah.
account energy prices, council tax, rent, savings, whatever it might be. So since we last spoke, we published our fourth edition of the index. And what we saw from the last edition, the last index, was kind of a changing face of first-time buyers. So we're seeing that the average age is now increased from 29 at the turn of the millennium to 34. So people are waiting a bit longer to buy. Um, we also know that under 25s for first-time buyers has really changed. So a few decades ago, they accounted for around a quarter of all first-time buyer purchases, and now that's around 6%. So that's a real shift. What's positive though,
Yeah.
um, is that whilst people are waiting a bit longer and stretching their affordability, what we also see in our data is that the homes that they're buying are slightly larger. So I think people are having to wait longer, but then trying to buy and set themselves up for their first house and maybe a bit of their second. And also, we're seeing that more homes meet the decent home standards. So the actual quality of the
Hmm.
properties first-time buyers are able to purchase has also improved. And that's great in terms of kind of energy efficiency and therefore your bills, expenses once you're in. So yeah, we're seeing changes. Affordability is still a challenge, but we try and
Sure.
help.
One of the things that I love about what you do at Skipton is I know you think creatively about how you can help first time buyers. I love hearing about some of the things that you've brought to market because you've been quite innovative. Track
Yeah.
record that's been around for about 3 years now, hasn't it?
Yes, it's its birthday in May.
Okay.
So yeah, no, and thank you for that. We do try to be creative problem solvers, if I say that,
Yeah.
because we know that it is tough raising a deposit. It is tough with affordability, and so we try and bring products to market that um, meet everyday needs. So
Yeah.
track record, absolutely born out of the fact that we saw loads of people talking on social media. I rent. I
Mm.
rent. I'm spending more on rent than I would pay on a mortgage. Why will no one give me a mortgage? And we said, well, exactly,
Yeah.
good point. So why can't we? So no, track record. It's in its third year. We've helped over 1,800 people get the keys to their first home through that. And in fact, we've just expanded some of the proposition around that. So when we first launched, your rent had to equal the monthly payment. We're now saying that that can be 150% of the rental amount.
Okay.
So we're just trying to expand that out. And we've also changed it to allow people in shared housing, shared accommodation.
What's the product where people where you don't charge interest to start with and let
Oh,
people get
delayed
settled
start.
in that? That's a
Yeah,
good
delayed
one.
start. Yeah, so
Yeah.
that came off direct customer feedback as well, which is the cost when you first move into a house. It might be that you want your white goods. It might be that you want to do some decorating. You've got all of this cost up front with then your legals and serve and everything. And we just said, actually, can we have a bit of breathing space? So we give customers the choice. You can have a 1, 2, or a 3 month delay. So you don't pay your monthly payment for that time period. Because the other thing we know as well, and we've combined that with track record now as well. So you have no deposit mortgage
Okay.
for renters, and you can also have a delay because we also know, as you will know, sometimes completion dates can move around. And if you've got to give landlord notice, those might not always
Yeah.
perfectly align. So you don't want to be paying rent and a mortgage
Yeah.
payment. So we just say, take a breather, don't worry for a couple of months.
I genuinely think it's great, and I'm sure it'll be. I'm sure it'll probably be copied by some of the other lenders. But first time buying is hard enough as it is. So to
Yeah.
have products like that, it's great that people can. I'm always telling people, don't give up. Explore your options, find out, talk to brokers because there are some great products out there.
Yeah.
If somebody's out there now and they're trying to get on the ladder and they're perhaps feeling a bit overwhelmed by the headlines and what's going on in the world, what sorts of things would you say that they should consider? What should they be thinking about in terms of their mortgage and their options?
Yeah, good question. So I think, well, we've just said don't give up. So don't give up. Do your research because there are
Mm.
products out there that can help you and that might be able to accelerate in you and get you onto the property ladder that you don't know about. So absolutely do your research. Um, go and speak to people and get advice. So we always say, go and speak to a broker, find out how they can help you, make
Yeah.
sure that they're there to help you and ask them as many questions to get as much understanding as you can. Um, you don't always need a deposit. So we've said there's products out there. We offer one. Other lenders are trying to innovate as well. So just think about all the different options that you can have. Um, and and you know what? Remember that even though there's
Family
loads of
help?
things, yeah, family can help. So we've got family gifting doesn't have to just be deposit. It can also be they can come onto the mortgage with you, but not onto the property, which is a great product. That's what we have one income booster, and brokers
Yeah.
really can know about that. But what I'd say is there's so much noise in the media and about interest rates and the challenges, and that's true. But at the same point in time, I'd say, stay calm. This is about a life choice. It's not about the next year. This is
Mm.
about, the home that you want to live
Mm.
in. It's about having, your sanctuary. So, you know, kind of there's that narrative out there, but just stay calm and think about what it is you're trying to achieve, and then enjoy it whilst you're looking and whilst you're moving in, because there's a prize to be had at the end.
Good advice, Charlotte. It is where people are buying for the long term. Actually, slight changes in property prices are fairly insignificant. I've actually been filming a new series of location, and we've been in Newcastle, West London, and this week was in Belfast. And I didn't know what to expect from the market, but the market was going absolutely nuts. Particularly over in Belfast, people were being outbid left, right, and centre. But we were helping first-time buyers, doing exactly what we've just been talking about, trying to get an extra step up the ladder, saving for longer, getting a good deposit together, and then buying a home that they can stay in and 10, 15 years. Charlotte, I'm going to have to try and put you on the spot, and I know this is a difficult one, but I'm interested to hear your thoughts on what the mortgage market looks like for the rest of the year. And obviously things changing all the time. No one's got a crystal ball, but what do you make of it?
Yeah, I think I need a crystal ball. I need to find one because it's going to definitely help me with work. But I think, listen, I think the market from a rate perspective, we're probably still going to experience volatility. So I think just we've got to ride that out and kind of expect that that will persist. I think currently that the money markets are pricing in some base rate increases. So, however, what I'd say is that's currently factored into mortgage pricing today. So we might see some base rate increases, but but if people are on variables or trackers, we might see some movements upwards. But again, that could all change tomorrow.
It's a big remortgage year, isn't it? So there'll be a lot of people potentially listening to this who will be coming off very low rates and they'll be facing a bit of a shock.
There is. It is a big remortgage year. There will be some people that might experience some kind of payment shock. I think it's probably the last year that we'll see that, because I think the super low rates that we saw post-pandemic are probably eroded now. The good news on that, lenders will be really competitive. If there's lots of remortgage activity out there, then they're going to try and be as competitive on rate as they can. So that's welcome news. For those customers, though, that are coming off a lower rate and then going on to something higher, I'd say make sure you're either speaking to your lender or your broker. Shop around, start planning early as well. So it's good to know what's going to come down the line in 3 to 6 months' time, so you can start to budget for that and work out what does that mean for you. And then if anybody has any worries, always get in touch with your lender, because there's options and help to support people. So the sooner you do that and the more open dialogue you have, the better.
Charlotte, as always, thank you so much. A really valuable conversation. Keep helping all those first-time buyers at Skipton. I know you're great at it. You're innovative, and it's brilliant to hear. So thank you. If anybody is looking for more information, then it is all in the description below.
All details correct at the time of filming. See www.skipton.co.uk for Skipton's mortgage range. Mortgages are subject to eligibility and lending criteria. You could lose your home if you don't keep up your mortgage repayments.